I'm Catherine Ross, and I'm here live from the floor of the NYSE with Jeff Marks, Senior Portfolio Analyst for Action Alerts Plus. All right, Jeff, we got to jump in because we woke up to comments from Steven Mnuchin saying that the U.S. is about 90% of the way to a trade deal with China. I mean, that's pretty bullish, to say the least.
I mean, it was quite interesting. So initially reported that we are 90%, since corrected that we were. What I would say kind of when you're kind of looking at trade right now is that, what will actually kind of get these comments, give them a little bit more, I should say, confidence behind them, is that we need to see a ceasefire of tariffs on the next tranche, right? So, just dating back to the beginning of the year, what everyone kind of built into that 90%, we're almost there, was that there was a delay in tariffs on the next tranche. And then we started hearing comments from the Trump administration saying how, we're in the final laps of things and that we're that close. And then it was confirmed with like the 90% here. So, I mean, heading into this weekend at G20, I think that if we see some type of delay, some type of ceasefire in new tariffs, we might be all right. If not, if new tariffs do get put in place, say effective like July 1st, then we might be in some trouble. But I mean, today's comments, I'll view it as encouraging that, that we were close. Maybe we can get back to that level, but I think you still have to be careful. You still have to be careful about kind of what's being put out there versus what can happen.
Exactly, because it's kind of a deja vu moment here.
Yeah.
We've been here before. We've seen these trade talks go to the 90% mark and then kind of back off. So you think that heading into the G20, we need to see kind of a ceasefire of everything?
Yeah, well, on new tariffs. So
new tariffs.
A ceasefire on new tariffs. I think that I would expect the administration to keep what's on. But if they can say, hey, we're not going to put anything new on, and they'll use that as a sign of good faith in negotiations, then we could see progress. But I think we need to see that first.
Now, you said the word confidence, and speaking of investor confidence, we also need to talk about Federal Reserve Chair Jay Powell and also St. Louis's Fed President James Bullard, who both yesterday kind of backed off of the idea of a rate cut next month. Now, and Jay Powell said that that the Fed needs to remain independent and that they can't react to short-term political interests.
Sure. Yep.
Now, for investors watching that, what should we be thinking right now?
So I think those comments were maybe more about like a 50 basis point cut, which to me would feel, if they were to cut, would be a little bit excessive. But I mean, they're taking a very patient approach. They're going to look at the numbers. They're going to see how trade kind of develops over this weekend before they act. There's a July meeting. I think the market right now is pricing in a 25 basis point cut. So we have to see there. But there's still a lot that has to go on. I mean, people talk about how could they cut rates with the market so high, and I think that there's almost like a wealth effect that comes into play, right? And that kind of goes into the Fed's thinking too. So the wealth effect being that when stocks are higher, consumer confidence is going to be higher. They might be more willing to spend more because they see their 401k balance is higher. And that effect has the reverse effect too, and we saw that last fall when everything was kind of coming down. People I think are a little bit more hesitant to spend when they see the market is a little, doom and gloomy. So it's something just to keep in mind. But obviously, there's a lot more to come with whatever turns out this weekend.
Let's switch gears. Let's talk about real money stock of the day, which is Micron. They released earnings last night. They beat. Looking at the way that they soared after and how investors really liked the quarter. But Micron's had a bad year so far. I mean, just to put it bluntly. So I'm wondering, was the response to Micron's earnings kind of them beating expectations and people just taking it as it is, or is there something more to this?
Yeah, I think they had a very, very low bar. I think investor expectations were very low into the report, mine included. I wasn't thinking too much into the quarter, but they were able to tell a good story, and that story relates to they're seeing a pickup in demand on the DRAM side. Which is good. I mean, that's going to be driven, and if we're taking more of a longer term view, that's going to be driven by so many secular themes such as 5G, IoT, AI, autonomous driving. So it's a good area to be in for the long term. Now, near term, they're going to have to cut down on CapEx, and then to do that, what they're going to do in their fiscal year 2020, they're going to cut down on CapEx because they need to get the supply and demand more in line. Because right now, there's just the supply is just outpacing out demand, and inventories are still pretty flush. So they're doing that, and it's actually a pretty responsible move because there's really three big players in this space right now, and what they all try and do is they all try and just flood the market with supply just to make sure they want the market share gains. So instead now Micron is going to pull back a little bit. They're going to let demand sort of outpace supply, and then eventually you're going to see prices specifically in DRAM begin to inflect and go higher. Now, what I view the stock today is now these stocks typically bottom before the cycle does, so that's why you're seeing this huge move in the stock today. But I'm still a little bit hesitant because there's a lot of overhang still out there with regards to trade and Huawei. Now they're trying to circumvent Huawei a little bit, or the laws against Huawei, and they're still trying to ship to them, which I don't know if I would have been pretty vocal about, but they decided to talk about that. But there's still a lot of moving parts, but I think it was a beat off of a very low expectation.
Thank you, Jeff. And just a reminder, Micron is our real money stock of the day, which means that you can head to realmoney.com for all the latest insight. So that's all the time that we have for today, y'all. I'm Catherine Ross. We'll be heading over to Action Alerts Plus to do our daily rundown over on actionalertsplus.com. Check us out there, and I'll see you tomorrow.